Ajmal, you can start.
Hello.
Yeah, Ajmal, go ahead.
Ajmal, you're muted.
Hello.
Yeah, go ahead.
Yeah.
Yeah, Rajesh, you can start.
Natali Geminder, esteemed speakers from Germany and India, members and friends from the industry. A very good afternoon and good morning. Welcome to the Indo-German Future Business Forum, organized by the German Engineering Federation VDMA in association with Control Risk and ICICI Bank, focusing on risk assessment mitigation, quite apt considering the present circumstance. Next slide, please. Friends, the German Engineering Federation VDMA is an association of the German machinery and plant manufacturers with more than 3,300 members and over 1 million employees. It is the largest industrial association not only in Germany but in whole of Europe. We cater to 38 specialized sectors under mechanical engineering. Our members produce machinery worth 232 billion euros and export 78% of it. Having our head office in Frankfurt, we are also present in Brazil, Russia, India, China, Belgium, and Japan. Next slide, please. Here are the contacts of our various offices in India. Friends, after decades of operating in India, German companies are well familiar with the opportunities that India offers. But in recent years, the risks of doing business in India have also become very evident. Risks and uncertainties like that of the current COVID-19 pandemic are more prevalent now. Through the web seminar today, we would like to throw light on the current Indo-German business situation and would serve as a forum for discussing smart and preemptive ways in which German companies and their local subsidiaries can plan for risks and manage issues of concern so as to minimize business disruptions and ensure continuity. Thus, help in making your business more compliant, trusted, and reliable in the future. So to talk about the subject, we have with us our chief guest, Ms. Natali Geminder, First Secretary Industrial Affairs, Embassy of the Federal Republic of Germany, for her address on current Indo-German business relations and future possibilities. Then Mr. Harald Nikuta, partner and head of German Business Control Risks, and Mr. Amit Narayan, partner head of India South Asia Control Risk, will give a presentation on what German companies should look for in India, mapping and managing risk and challenges among local subsidiaries. And Mr. Kashinath Hariharan, head of payments and cash management, ICICI Bank. He will talk about the banking landscape in India towards becoming your growth partner. I now request our Managing Director, Mr. Rajesh Nath, for his kind address. Mr. Nath has more than 29 years of experience working in various industries in Germany and India. He is accorded the Cross of the Order of Merit, High Civilian Award from the German President for promoting the Indo-German trade. Over to you, Mr. Nath.
Right. Thank you, Ajmal, and good afternoon, members and friends from the industry. Thank you for joining us today for this very important and relevant web seminar on Indo-German Future Business Forum, being organized by the German Engineering Federation, VDMA, along with our partner, Control Risks, and the ICICI Bank. We are privileged to welcome, first of all, Ms. Natali Geminder, Secretary Industrial Affairs at the German Embassy in New Delhi. Thank you, Natali, for joining us today for this webinar. I also extend a warm welcome to our speakers, Mr. Amit Narayan, Partner and Head of India and South Asia Control Risks, Mr. Harald Nikuta, Partner and Head of German Business Control Risks, and Kashinath Hariharan, Head of Payments and Cash Management, ICICI Bank Limited. So hearty welcome to you, Amit, Harald, and Kashinath. Friends, the India and Germany mark 70th anniversary of their diplomatic relations as modern countries this year. Bilateral relationship between India and Germany are founded on common grounds and democratic principles and are marked by a high degree of trust and mutual respect. India was amongst the first countries to establish diplomatic ties with the Federal Republic of Germany after the Second World War. In the last decade, both economic and political interaction between India and Germany has increased significantly. Today, Germany is amongst India's most important partners, both bilaterally and in the global context. Since 2012, India and Germany have a strategic partnership, which has been further strengthened with the intergovernmental consultations, which allows for a comprehensive review of cooperation and identification of new areas of engagements. India is amongst a select group of countries with which Germany has such a high level consultation. The diverse area of engagement includes some of the new and emerging areas also, such as artificial intelligence, space, smart cities, and urban green mobility. Friends, the cumulative German investment has been 12.39 billion USD in India since 2000, mainly in automation, transportation, machinery, electrical equipments, insurance, and services. Around 1,600 German companies are operating in India, including 600 joint ventures. Germany is the 7th largest FDI provider in India since April 2000 and the largest trading partner amongst the European countries. Out of the 30 companies in German DAX, 26 are present in India. But out of the mid-sized companies on the MDAX, only 28 out of 60 are in India. Now coming to India, friends, Indian manufacturing is emerging as one of the high growth sectors with the Honorable Prime Minister's clarion call for Make in India program to make India on the world map as a manufacturing hub and give global recognition to the Indian economy. Hence, this makes India a potential market for capital goods manufacturing. The Indian government has demonstrated its strategic investment support to support manufacturing companies investing in multiple sectors. The government is trying to give a boost to the contribution made by the manufacturing sector and aims to take it to 25% from the present level of about 16 to 17%. For India to become a $5 trillion economy by 24-25, manufacturing has to play a significant role and contribute about 1 trillion USD. To further strengthen the cause, Atmanirbhar Bharat 3.0, or the third set of COVID-19 economic stimulus announced by the Finance Minister on November 12, 2020, spelled out the production-linked incentives or the PLI schemes. Now, the government has added another 10 sectors to this with a commitment to set aside rupees 1.46 lakh crores over 5 years. Now, PLI was conceived to set off the higher cost of manufacturing in India as compared to other countries, especially China. It seeks to cushion the industry from higher costs due to steeper tax rates, finance cost, power tariffs, as well as land prices. A parliamentary panel recently said logistic costs alone account for 13% of India's GDP, much higher than the developed countries' figures of less than 10%. Now, the COVID-19 induced hardships have made these schemes even more useful for the industry. Also, friends, the big advantage of the PLI scheme is that it supplements all other SOPs and it is not location specific and in fact has nothing to do with tax. Hence, the government will pay a certain percentage of the value of additional production companies make after fulfilling prefixed annual incremental investment and production criteria. Under the PLI, companies will earn as direct payments on an average 5 to 6% more than what they would otherwise get. While for companies it is a top-up incentive, for the government it is an assured additional investment, as well as job creation for every rupee it spends as incentive. And most important, it is WTO compliant. However, friends, India is not just a country, but a subcontinent, equivalent to the size of the European Union, with multiple cultures and linguistic variations. Due to this, communication, logistics, market coverage, and financing becomes challenging for German and overseas companies. Therefore, a good understanding of the geographies and cultural differences is required to bridge this gap. Our knowledgeable speakers today we will deep dive on mapping and managing risks as well as banking landscape in India. However, before going on to our speakers, I extend a warm welcome to Ms. Natalie Geminder from the German Embassy. And Natalie, thank you for joining us, and we look forward to your address on Indo-German business relationship and future possibilities. Over to you, Natalie.
Yes, thank you very much, Mr. Nath. Thank you, everyone at VDMA. Thank you to the other speakers for having me being part of this conversation today. Very warm greetings, not from the building of the German Embassy, since we are still following, of course, the lockdown restrictions and rules. So we are working from home, but a very warm welcome from the team of the German Embassy as well, which has been a very good partner, I believe, to the VDMA in the past decades, I have to say, forever since we've been here, I believe, and since ever the VDMA has been in India. And as you rightly mentioned, Mr. Nath, this year is a special year in the history of Indo-German relations. We celebrate 70 years of Indo-German relations, and that is certainly something to be celebrated. However, this year, we all know it, has been special, as has been the last year, unfortunately, as well. So the last 6 months, when we say that we now are in the month of June, so we have the first half of 2021 already behind us. We have seen some dark moments, but also very recently, hopefully, some rays of light and hope. As we all know, and I hope none of you have been affected severely by this crisis. However, we have seen it everywhere on our screens, hopefully from our homes. India has been reeling from the second wave, the second onslaught, so to say, of the COVID pandemic, tragically ending many lives. But the help coming from abroad was very quickly instituted, and what we have seen was, of course, a shortage of oxygen and other essential medical supplies, and this has all brought India once more to the spotlight of global attention, of course. But this was also a time when Indo-German relations stood very strong, and this was especially exemplified, I think, by the very strong support of the Indo-German business community as well, with the tremendous efforts being routed towards India. So not only the companies here on the ground, but also their headquarters or their joint venture partners over in Germany, they all rushed to help. And in the end, we're now looking at a total of more than 50 million euros in help, which have come through the German federal government, the federal states, but also, of course, the business community. More than 1,200 ventilators were donated to India, to Indian hospitals. More than 2,500 oxygen concentrators were also donated. And all of this is not, it's not over yet. Just as the challenge of the pandemic is not over yet. So we are looking at a very sustained business community support. And we're very grateful to VDMA, its member companies, and then the Indo-German business community for that. So while we're looking at this slowly, we're also seeing a light at the end of the tunnel. The socioeconomic consequences, of course, they will be felt for much longer, probably also much harder in rural areas of India with the sparse health infrastructure. And of course, it comes as no surprise that as of late, or in the past weeks and months, consumer confidence has taken a dip, and it will take some time, of course, to regain confidence. A very welcome signal, however, was almost exactly 1 month ago, the EU-India summit, which took place, of course, virtually under the current circumstances. But the EU-India Summit, Leader Summit, saw an initiative and a willingness from both sides to revive talks about free trade and possible investment protection agreement, which we very much welcome, and which I believe is also very much welcomed by the German business community. The summit also saw the presentation of the Indo-German Strategic Partnership on Connectivity, which will help to foster inclusive growth through trade, connectivity, and technology. These are, so to say, the goalposts of our future endeavors, and those will hopefully bring the Indian economy back on track by, of course, breaking down trade barriers and by securing investments and by creating synergies all across all industry supply chains. So by turning this crisis into a set of challenges and opportunities, India and EU should definitely seek to deepen their ties still and to extend cooperation. And this is hopefully what we will see in the coming weeks and months and years, especially cooperation in the field of research and development, science, technology, biotechnology, also, which has been mentioned before, biotechnology and pharmaceuticals, of course. What we have seen is that medical equipment and pharmaceuticals are not only the need of the hour, but they will still be needed in the future, even more so. And this way, India and Germany, they will be able to take forward their already very sustained relationship, but maybe to also fight climate change together and encourage more trade and investments in green technologies, for example. This is definitely something that both India and EU and Germany are interested in and will be looking at in the framework of a more sustained cooperation. The interesting thing is that once political leaders, because since I mentioned the now past EU-India Leaders Summit, once political leaders start to look into these areas and explore the possibilities in many sectors, they will of course find that this is by no means uncharted territory, because of course wherever politics go, business has always been there first. So I believe a lot of companies in Germany, but also in India, are already heavily invested in the sectors and areas that I've just mentioned. And with the help of and the experience of the business community, this is something that we will take forward together, meaning that the German government is always eager to listen to the experiences from the business community in India, here on the ground, but also back home in Germany, and to listen to their needs, to their requests, and to their visions, because this is definitely something that sometimes, at least, public service may seem to lack, at least from the outside. It is the visionary and the innovative approaches from the industry that help us to join forces and to jointly create a better future for us all. Thank you so much.
Thank you so much, Nathalie. Thank you, first of all, for joining us today for the web seminar, and thank you for taking out time. It's a very important address you have made, mentioning about the 70 years of relationship between the two countries, India and Germany, and the support we have received from Germany in this times of crisis is very much appreciated, and we look forward to stronger bonds in future. With this, we come to the next speaker, Mr. Harald Nikota from Control Risk, and Mr. Amit Narayan from Control Risk. Mr. Harald Nikota is the partner and head of German business Control Risk, and Mr. Amit Narayan has the Indian operations for Control Risk. So we would appreciate, we look forward to the presentation and insightful presentation from both of you. Over to you, Mr. Harald and Mr.
Yeah, many thanks to VDMA for getting it organized, and a warm welcome to everybody participating and joining this conversation today. As already said, I'm responsible for our business in German-speaking countries and Eastern Europe. And when I talk about our business, and please switch to the next slide. It is very much, and another one, it is very much the business of a global risk consultancy with more than 3,000 people out of 40 offices. We serve clients all over the world, and of course, particularly in India and Germany. And we are enabling them to master critical and most important situations and learning based on own experiences and other experience how to get the own organization better organized and structured to be compliant, secure, and of course, as resilient as possible, and that on a global scale. And when we talk about opportunities like Indo-German business, we are of course helping companies of all kinds to better understand new markets and new business models and to support them to grow and to be also in a positive way, business-wise resilient as possible, meaning to transition their business model into the future. Next slide, please. When we talk about challenges with India from a German point of view, this is what I contribute to our discussion. I would like to start with one of the CEO of a major German company in the technology area and very active in India as well, refers to a statement of his grandfather who already said, look, India is the next great chance. So that was more than 50 years ago and still is true. That might provoke some thinking, the next great chance. So what do we actually have to do to make it today's chance? And I would like to give you, from headquarters point of view, and as a result of several discussions, a general point of view, outlook on business, how people in Germany perceive it, concerns, and of course expectations on the for the Indian side to get it right. So in general, that was already covered very much by the first speaker, by Nathalie Gminder, the situation as it is in India, and of course people in Germany are concerned already by the pure numbers because they are so big when we talk, for instance, about COVID cases, so on and so on. Yeah, and people who are less experienced are already very much frightened by numbers, size, and differences. For those who are a little bit more experienced, it's easier. They understand it because they simply divide all numbers by 15, 16, or 17, and they try to have a comparable grounds. Still, the outlook for India from a German point of view, and I refer to a recent poll of Handelsblatt, one of the most famous economical newspapers in Germany, is less favorable, to frame it in a positive sense. On a short term, it even looks very difficult. But on a medium term, long term perspective, I'd just like to refer to the citation we have already talked about. And when we look on the value proposition that can be provided by Indian business, it's a variety of different opportunities, which goes from software, innovation, high-end technology business model, but also looking at India as a market for itself. And then, of course, the adaptation of business models, manufacturing, as I refer to Mr. Arnott and his brief explanation, but maybe with a view on lower developed countries, meaning looking to capitalize on the cost advantages India really has. So it is about the value proposition. When we talk about concerns from headquarters, we have to differentiate between internally related concerns and externally. Internally, it is very much that German companies, at least those I've talked to, try to involve Indian management more and more and more. And so they hope and expect that the Indian management will take responsibility, will have the right capabilities, the right entitlement, but they fear that there will be a lag for the time in between. And the second major fear is about losing the cultural fit to the German roots. On the external side, it is basically three concerns. The first one is about unclear tax rules, the second about investment protection, and the third one more and more about the variety of perceived administrative hurdles. So that all needs a lot of explanation. And here we come already to the expectations and, so to say, measures which should be taken by the Indian side. Number one is about demonstrating and ensuring business continuity. That means demonstrating that you know your business, that you have the self-confidence to plan, act, and report accordingly. So to show that you are in command and that you are in control, so to say. But at the end, everything comes down to communication. And here I would like to give you 4 core message out of the conversations. Number 1 is about, please, less data, more information. The second is about less problems, more solution. The third one is very simple, as the Germans might perceive themselves as very direct. Please get on the spot. Yeah, help us to have a direct conversation, direct communication. And the last one is about credibility. Credibility, which is for Germans usually aligned with capability and experience. And summarizing all these points, I would like to just frame it that way. And please do the next slide. The first one is about understanding India. It's most important to make people understand India and in its variety, specialities, changes, ongoing things. The second one is about shaping, reshaping, and again, shaping the value proposition, which might change quickly or which has a consistency that has to be explained as well. The third one is really to ensure the cultural fit. And for the fourth one, acting accordingly and continuously building trust. Because at the end, all Indian affiliates of German companies are still, so to say, in the culture of German companies. And as you might know, culture has strategy for breakfast. But please make sure that your strategy won't be eaten up by a lack of culture. Amit, I would like to hand over to you.
Thank you, Harald. Manur, if you can move to the next slide, please. Thank you. And I want to kind of take on from where Frau Geminder spoke about the joint future for us. And this entire presentation and Harald's point of view around kind of creating or transitioning to the future, I'm kind of reading from phrases they've used, is the predicator for this entire pretext. There are 4 spotlights that he's drawn out. What I want to do is to tell you 4 stories, okay? The first one around making sense of data and understanding India. A German manufacturing company, this is the case on the right, came to us a couple of quarters ago, wanting to get an integrity due diligence done on a very prominent Indian company, and everything was perfect. You know, they had done their legal, they had done their commercial and financial DD, and everything was perfect, and they were ready to get into bed with them. And then they came to us and said, can you do an integrity and a reputation due diligence check on them? And we found that there were significant issues of concern around this particular company's CEO being involved in corruption and money laundering. Now, obviously, a German company, given the conservative place that they were coming from, was extremely concerned. And when we dug deeper, there were more issues of concern that came up. Now, the point here is, when you have these many challenges thrown at you in the face of a very clear opportunity, what does one do? And that's the important point that Harald was trying to make. You see all the data, you understand all the context behind it, but you need to understand how to do business in India. Therefore, an opportunity has to be found to still make it work. So what did this company do? Very simply put, they looked at not getting into a JV partnership with them, but more of a technical arrangement with them, which was a little bit higher than being just a simple supplier to them, but deep enough and engaged enough for them to do sustained business with this organization for an extended period of time. That's what we mean by saying you need to make sense of the data, make sense of the opportunity, and find it within all the complexity that exists within the marketplace in India. If you move forward, please, to the next spotlight. Another story, a luxury car company, also German, was offering certain discounts to certain professionals, okay? And it was found that dealers were using these discounts as an add-on to provide these discounts to ineligible buyers, people, and this was for professionals, right? This was, these discounts were being offered to doctors, to lawyers, to engineers, and so on and so forth, people who could prove their credibility. Now, the company found out, was shocked, and essentially created what got us into investigate why this was happening. Now, we went in and we found out that the actual beneficial owners were not certified to get these discounts. And so the company obviously, kind of got into a flurry and asked us, what should we be doing? And the first thing we said to them was, are you training the dealership as to why it is that you're providing these discounts? So the third point that is made, the why is as important as the what. And it went into kind of explaining that this organization was actually providing these special discounts because of the pride and the heritage of the brand. This particular automotive brand was known for the trust that it had among the engineering community, the doctors, the lawyers, and the so-called kind of established upper middle class in Germany and other parts of the world. And they wanted that same level of aura to be reflected with the brand here in India as well. And that was the reason. And when this was explained to the dealers, they understood. So the most important thing here was understanding the value proposition. The dealers saw an opportunity and they started capitalizing with the belief that the German company would be, fantastic, you're doing more sales. But that wasn't what they wanted. They wanted business to be done in the right way. And the way that, we were able to restructure the problem by putting in training and reinforcing the true reasons why this particular discount was being offered meant that it didn't require dealers to be chastised and wrapped on their knuckles. Instead, a collaborative, cohesive solution could be found so that by explaining the why, so that the tone from the top, the message in the middle, as well as the whisper at the water cooler was the same. And that's a very, very critical kind of thing to kind of note about when it comes to communicating value proposition. Next slide, please, Manohar. Another story for you. Again, a German manufacturing company had huge worker compensation issues, and that inevitably happens. There is strife between unorganized labor force and management, regardless of what kind of nationality the owners are. But what happened here? The unrepresented workers found a trade union representative who walked in the door, literally. I mean, they didn't do any due diligence on this individual and said, look, I'll represent you and I'll get you a 15% increase or a 50% increase, whatever it was. The German company, from dealing with a set of unorganized workers, suddenly started engaging with this trade union leader who also brought an add-on political risk to this entire situation. And in addition to all the legal expenses, all the compensations, etc., there was an actual geopolitical issue that was kind of emerging. They got their HR leader to start negotiating the settlement. A settlement was negotiated, but there were two levels to it. One was the official one and there was an unofficial one. And that created a further issue because there were multiple kind of unethical transactions that were taking place there as well. Now, the HR manager was removed, but that wasn't the end of the problem because it exposed the company who, the HR manager claimed he was working under their guidance. They had to take care of not just kind of a simple worker-related compensation issues, but an actual bribery, ethics, and compliance problem. Now, these issues obviously were precipitated by the fact that, the worker compensation issues, the root of the matter remained unresolved. And that is where we're kind of understanding or trying to find the cultural fit. The reason why the organization had to kind of do 4 times the amount of work instead of 1, was a typical case in point. One was about community engagement. A lot of the workers lived around the facility. Is it possible for the company to have done more with the community rather than giving more money? Is it possible to have material and medical and other benefits to be provided? But the other reason was about trusting and yet verifying. The representative that they started speaking with was not verified, was not somebody that either the company or the workers could trust, and the right kind of due diligence needed to kind of go into that. But also about empowering the workers. It's not just about earning your daily bread. It is about building careers. It's about building communities. It's about building for the long term, the future, as we heard before. So it's important to find that cultural fit, because at the end of the day, our strong contention is, and this is what happened, the German investors and the workers on the floor were actually fundamentally pulling the same direction, and eventually a solution was found. Next slide, please. a fourth story to you. This is about a whistleblower letter. WB is a whistleblower letter about a particular organization, again a German organization that was set up in an SEZ in India, an export zone, and you know there were multiple kind of issues around invoicing, which led to you know a match between the SEZ representatives as well as the company. Multiple transactions, supply chain risks, etc., were fraught, and there were a lot of kind of issues that kind of compromised this whole setup of the company. The business continuity itself was endangered because by the time the organizer or the investors, the German investors, actually got into it, they realized that there were some significant issues that they hadn't necessarily kind of communicated or been able to handle. Now, what was the issue here? The issue here was that, again, the commercial decisions were being taken fundamentally under the premise that the Indian management believed that more was necessarily good. But what was important for them to understand was that there was a certain way that the German companies wanted to do business, and it was important that they do business in the right way. Now, obviously, what we did in place was, again, you know, create greater communication, better communication between establishment of expectations, but also better ring fences that were put in place to make sure that the business could continue to operate. If you kind of roll on to the next slide, and I just want to kind of use the last few minutes to talk about some of these issues that we've spoken about. A lot of you responded to the VDMA poll that was put up in lead up to this this seminar, and you many of you pointed to policy related complexities, and that's 100%. That's always the number one issue. That if you put the pandemic aside now, and I want to talk a little bit about the pandemic because the pandemic kind of changes a lot of the kind of fundamental rules of business, but it does not change the underlying issues. That's the most important thing that you need to understand here. The pandemic is one of the kind of new change factors that are getting introduced into the way that we do business. Okay. But large-scale, long-term disruptions are going to be a reality for the business landscape for the next many decades. It may not be a pandemic. It could be climate-related. It could be cyber. It could be supply chain-related. I mean, how many people thought the Suez Canal disruption could happen? But it did. Geopolitical concerns are now increasingly important, and so on and so forth. So it's very important to understand that long-term, large-scale disruption is going to be a part of our lives. But underlying all of that, there is these three kind of broad issues that you've highlighted here. The issues around regulatory unevenness, policy complexity, infrastructural bottlenecks, as well as uneven market demand. So bear in mind that even as you plan around all of the key fundamental cultural issues of doing business as a German company in India, there are these three. This is what we call the trifecta of risk in India that will always come to impact your business if you're not consciously kind of taking care of that. So if we move forward, I just want to kind of spend the next 2 minutes to just talk about some key takeaways. If you roll on forward, please, Manohar. Thank you. One more, please. Thank you. Yeah. Understanding the outside in and the inside out. Okay. Very simply put, there is there are policies and procedures, books and records and transactions, and the inside out is essentially a lot of what a typical German company, especially from the headquarters, would be looking at. But what you as Indian management can bring from the outside in is an understanding of how the external landscape, the third-party relationships and the behaviors of how the Indian buyer, how the Indian supplier, how the Indian manufacturer, people who kind of contribute to your supply chain are going to behave. And it is through that particular hourglass that business had to be evaluated and measured to get the best results. Efficiency inside out, but also a consciousness of what the outside in factors are that are going to impact your business. If we move forward, I'll try and explain that in the form of another chart. a typical manufacturing enterprise in India, and this is from the work that we've done with many, I mean, I'm going to say over 100 manufacturing companies that we've worked with. We need to understand, and all of you are manufacturing companies, we need to understand that there are 5 levels of risk that you need to be conscious of on a daily basis, please. Every single day, you need to be conscious of employees, obviously health, safety, security, especially in the pandemic. I think all of us have done exceptionally good work in being able to take care of our employees and their families, but also then moving out communities, local government stakeholders. Remember the case of that German company that had an issue with its workers, where the real concern was that the community was not being taken care of, and that's why the workers were unhappy. Then we move on to the third parties and partnerships. No longer is the case that a company is responsible only for its manufacturing facility and its marketing. You have to start worrying about your larger business value chain, supply chain as well. Going further forward, the regulators, legal, financial, operational risks, and then of course moving to political, trade-related commerce and so on and so forth. Now, these are on a daily basis issues that will impact you, and how you're able to map that in the context of your business is going to be extremely critical. If we move forward, we talk about what we call kind of the smart zone of compliance. A lot of us, especially people who do a lot of work in kind of ethics, compliance, policy and governance, believe that there is a line in compliance, and that if you're on one side of that line, you're fine, and the other side, you're not. And our contention is that it's not about being on the right side of the compliance line. It is about being in the smart zone, where you are safely in a zone where you are moving beyond just the actual compliance, but actually doing things that make a difference to your stakeholder set. A very simple example, the CSR fund that a lot of the companies here are required to kind of make. 2% of your profit has to go towards a CSR fund. A lot of that fund goes into community development. But how many of us are actually making sure that that fund is being utilized in a way that builds and enhances the brand and reputation of the brand with the community? And how are you being able to do that in a way that's environmentally sound, socially responsible, and governance-wise? That's the smart zone that we talk about. If you move forward, that's I think it's the last slide. Just very quick takeaways that we've spoken about. I'll leave it there for you to kind of just talk about. I've spoken about all of these 6 points, as has Harald, leave you with actually the next slide, which I was particularly pleased to be partnering with VDMA and to have Frau Jemanda here with us at the 70th anniversary of the diplomatic engagement between India and Germany. So thank you very much for giving us the opportunity, and we'll take any questions now or later. Back to you, Mr. Nath. Thank you.
Yeah, thank you so much, Amit. Thank you, Mr. Nikuta, for taking us through the different risks the businesses face, and very rightly that before managing or controlling risks, we need to assess the risks. And thank you for sharing the deep insights with examples and case studies, which I think will be very helpful for the German companies and the subsidiaries in India. No doubt there will be a lot of questions from the participants, and the participants are requested to put up their questions on the chat box, which we'll take up during the question answer session. Now we quickly move to our next speaker, Mr. Kashinath Hariharan. He is the head of cash and payments at ICICI Bank. Hariharan will give an perspective from the bank side and how a bank helps become a partner of your growth in your What do you, Mr. Hariharan? Looking forward to your side.
Hi, am I audible? Yeah, okay, thank you. Thanks everyone, and a good afternoon to each and every one of you, and indeed a pleasure to be part of this August forum, which is promoting the Indo-German collaboration and the developments that have transpired 70 years and growing. So today I'm going to talk about the whole risk with respect to the banking aspect, and how the banking can be integrated as part of your risk management. I mean, Amit spoke in pretty much detail, And in one of his charts, there was this financial aspect, pertaining to the risk, one of the sub bullet point in the business risk block. So most of what I'm going to speak will be, that particular bullet, if I may say, and we try to expand it and what the bank is doing and what banks in general are doing, and how might we partner, with companies wanting to come into India from Germany to actually provide a safe banking environment which actually aids the business growth process. So that's the thing that we're going to talk about today. But before I do that, maybe just a brief introduction about who we are as ICICI Bank. So actually, we are the leading financial services brand in India, incorporated in 1955 as a development financial institution. And in 1994, we kind of became a commercial bank. And in 1998, we kind of started our entire retail banking franchise. And you would know that after 1998, the entire retail banking landscape in India has been completely revolutionary. Post our bank kind of we've been the pioneer in the entire retail banking, technology-led growth, consumption-led growth. We were a bank which poised ourselves right at the time when India was opening its economy in a significant manner. We are a well-diversified financial services company, and in the year 2000, we added insurance, portfolio. We also are present internationally, and in 2003, we started our international banking operations, serving a lot of MNCs, multinational companies, NRIs, local communities from the local geographies. And today we are 5,300 branches across India, and also the globe, and we are present in about 16 countries in the form of branch offices or subsidiaries or liaison offices across major geographies in the world. Go next. Next, please. Yeah. So these are our spectrum of financial services. We are a complete universal financial services conglomerate. So the bank is the starting point, and then we spoke about ICICI Prudential is our insurance company, life insurance company. ICICI Securities is basically our trading company, and we have an investment banking company. And under that brand, we have this ICICI Direct, which is the largest equity trading platform in the country. And this was again a very revolutionary platform, which has created, I would say, a lot of records in the past in terms of being the first platform to conjoin a trading platform to a demat account to a banking ecosystem, and offer a complete comprehensive 3-in-1 kind of a setup for the retail and institutional investors. So it's taken the markets far. Our ICICI Securities is a leader in the fixed income and money market. We are also a significant mutual fund in the market. We operate under the brand name of ICICI Prudential Mutual Fund. ICICI Lombard is our venture company, which is specializing into general insurance. And we also have a venture capital arm where we do take exposures in certain categories of startups, and we invest in early stage companies where we are seeing growth opportunities and stuff like that. And lastly, we also have a subsidiary company for home finance, especially for those geographies which are in the tier 2, 3 locations. It's a separate subsidiary, wholly owned subsidiary of the bank, and operates as a separate company as ICICI Home Finance. So if you look at the landscape of the Indian banking system, we are pretty much present across the length and breadth of the financial value chain, right from the banking. And within banking, we are present in the in the retail bank, in the corporate bank, in the MSME, and every other segment that a financial life cycle touches. I think we are pretty much present as part of the bank. And yeah, go next, please. Yeah, so this is the last and only slide that I have after what I have spoken, and I would like to kind of take you through this, and this is the centerpiece of what I want to speak today. So, in terms of what Amit also mentioned, there are a lot of changing paradigms. Times are changing, times are different. Risks are growing and risks are mutating. What was a risk earlier is no longer a risk. New kinds of risks are coming, which are taking people, completely off guard. So therefore, there are some approaches that we see that we bring to the table as a banking participant, where we could potentially, in a partnership mode, mitigate some of those risks. So the way over the last, I would say, a couple of years, 2-3 years, we've looked at that. When we look at an entity, say a manufacturing company, and and Amit also mentioned about it, we're not just talking about banking with that entity. We're looking at both from a business perspective, what is the ecosystem of that entity. So the ecosystem essentially would be, on one side, you would have the the buyers, you have the vendors and suppliers, and then you will have the government, you'll have the employees, and the entire stakeholders, in which the corporate essentially interacts. So through while we are the primary service provider for the entity, but our endeavor is also to see how we can get the various banking operations of the immediate ecosystem of the corporate entity or the manufacturing or any other entity. Now, what does it entail in terms of risk? It is that the bank has privy to a lot of data. For instance, in terms of what travels, what is the fund flow, what's the receivables, what's the payable, and so on and so forth. And an analysis of all these patterns, helps the bank also to understand the underlying risk early on. And there are multiple models that we also build in place to identify early warning signals about certain things. And in collaborative manners, we can definitely partner the clients to see how we can help to mitigate some risk from the ecosystem, because we are having an ecosystem and based approach. The second approach that we think that is going to be a central piece in managing risk in our view is the integration of banking with IoT, Internet of Things, especially in the manufacturing area, where goods, it's a very long value chain, right from sourcing to multiple sub-stage of sourcing, then you have manufacturing, and then you have the distribution, and there's a long leg, and there's a traceability factor out there. While this is very nascent, I guess, in India, but days are not far where banks like us are very soon building the infrastructure to integrate the flow of goods with the flow of money in a very seamless manner. So that's very important, because net, any risk that happens finally, other than some of the risks that Amit mentioned, the financial risk is also embedded in the process. So once we are able to integrate the goods flow and the financial flow through technologies like IoT, then the revelation that comes of the real timeness of the process, and how you can pinpoint risk goes up manifold. So this is very significant, because the number of internet devices, I think is going to be 30 billion devices in the next 10 years or so, maybe 2030. That's the number that analysts are putting out there. So it's going to be ubiquitous, and how banks like us on other banks are going to integrate that as part of their fund flow. It's really a centerpiece in how to manage risk. The third one, this is ubiquitous these days, is the whole chapter of online banking, where today, as opposed to a physical banking, which are fraught with risk in terms of paper-based transactions, mistakes or misappropriations happening, connecting the finance department directly with the bank through the interface of online banking is a much safer option. And today, I think we are leaders in this space. And today, almost everything that you could perhaps do in a bank, in a branch, today we could perhaps do it online in our interfaces. So we built, whether it is cross-border trade or whether it is any kind of complex, payments, or setting up workflows or authorization metrics, or whatever else is there in terms of the company's policies. Essentially, the company's policies could get coded. The risk management policies of especially who would the signatories be, in terms of authorizations and all that can be easily coded into the online banking platforms. So no need for any physical apparatus to manage that kind of payment risk. The other important part that in the recent times, and that's a brand that you would have seen, Infinite India. We've set up a marketplace for companies wanting to come into India. I mean, this is our effort to bring into place multiple things together and enable the companies from outside India to come and start their business in a seamless and frictionless manner. So today, I'm sure all of you who are part of this know that coming into India has its own challenges, and Amit did describe some of them. There are multiple regulations, multiple bodies that you have to take approvals from, and so on and so forth. So what we are trying to do is how do we extend. Now we are a banker, right? We don't provide those services, but yes, we are partnering with multiple such stakeholders. We have a set of partners who we are working with. So any company reaches us onto that portal, we kind of get them and get their conversation going, and then we kind of through that platform introduce them to multiple other stakeholders. Like if you want to incorporate your company, then you want to get started with your payroll, for example, or you want to hunt for a real estate. So we have people who can help with that. HR services, the whole lot of things that any new setup, very fledgling setup wanting to set up their operations in India. That's our endeavor. It's just and I think this is a significant part of managing your risk, because if you enter well, if you enter strong, then the way you kind of grow is you will be well past your birth pangs in a very quick time. Now that's the whole objective here of how we could provide that support for companies coming into India. This supply chain, I spoke about it. Companies have supply chain, right? From the sourcing side to the selling side and stuff like that. And today there are banking solutions that we have introduced, and these are class leading, one of the kind solutions where, for example, I will take the example of SAP, because that's again a German thing. So most manufacturing companies use the SAP ERPs. So we've kind of developed a proposition where on a cloud version of SAP, we integrate the SAP of the company and lift this whole SAP ERP into the cloud. It's an authorized process, it's a SAP licensed process, right? Now, once the SAP comes on the cloud, then the constituents of the corporate, whether it is the vendors on one side, the dealers on one side, can all then start working on that instance of the cloud as though they are working in the environment of the corporate themselves. So today, if you see, the vendors, dealers, and all of them have their own separate systems, and typically they are connected by a vendor management system or a dealer management system, but not integrated with the ERP of the company. So this is the kind of, again, while it's a business tool, but we are saying that this is a very crucial risk management tool as well, because you then create an extension of your company both on the vendor side and the dealer side. And what that entails is that the dealers, for example, when they are placing orders from the companies, they can exactly look at in real time, what's the order, how many pieces are there, or what variants are there, what's the pricing, and the company can also decide to show whatever they want to show to their dealers, in terms of ordering. So the ordering can be online, right? The payments can be online. And since everything is online and it's a bank incubated platform, so the bank is able to have a visibility of this whole chain and therefore give you digital lending, very quickly. So no need for to have labyrinthine process of actually granting, paper-based limits and stuff like that. You know the transaction, you know the history, you are integrated with the core of the SAP in which the entire transaction data is residing, and therefore make use of the data to kind of run the finance. And the same thing happens on the vendor side as well. So that's some kind of systems that we are working on, and we and there's a lot of uptake, and very large corporates using SAP have gotten integrated with this, and it's actually driving a whole lot of conversation around both in terms of the sales visibility, process convenience, and the reconciliation again is a major problem, which is something that this things addresses. The other thing which is very critical, which banks like us are trying to do, is basically today there's a whole lot of data which is available, data from the company's own payments and collections, the receivables, payables, and stuff like that. Plus you have the ecosystem data coming on, the GST, GSTN data is there. Then we have the e-invoicing data, which is today available with permission. Then you have the e-way bill, which is basically the transport document. Then on the export import side, a lot of Government of India has enabled a lot of visibility on that data with respect to imports and exports. That's also available in an authorized way. So all this is making a massive data cohort and telling a story which essentially can be used for three things. One is you enhance your sales, you identify the needle from the haystack to understand where exactly you want to pitch your products, right, the opportunity. Second, is it helps in terms of identifying new markets, where you are not present, where you should go, etc. And third, and most importantly, it it saves you from risk. And we are actually using some of these models as we speak to mitigate risk for the bank itself. And therefore, anyone banking with us is something that we can think of. How do we partner here and look at this? Briefly touch upon API banking and blockchain as a cohort. So you see, very quickly, I would say, and this is prevalent in most part of the world. So if I look at a corporate or a company, manufacturing company interacting with their bankers, so there could be three levels of engagements. So one level is an assisted banking service, which is typically characterized by the branch physical network banking, where there's a interaction happening in the premise of the branch, and then there's a physical person coming, relationship managers, whatever else happens. The second one is the self-assisted service branch, which is the online banking, which I did speak about. So there's a massive migration from the physical to the self-service channels that we have seen on the time. The third one is basically the invisible channel, which is what is API banking all about. So today, both in terms of business and in risk management, API banking is actually the way forward. So what it essentially does is, today any customer has to come into the environment of the bank to do banking services, as in you have to come to the physical branch, or you have to log in to, say, your own bank portal, and then you do the banking. As opposed to this, today banks like us, we have developed a lot of APIs where we embed ourselves into the ERPs of the company. So we are going into the customer's environment. Customers are not coming into the bank's environment, and that makes a lot of difference. So there's the comfort of the customer in actually working in their own ERP environment. So what it physically means would be is that, say there's a manufacturing company and they have to make their wage payment, their vendor payments, or tax payments and stuff like that. With our API integrations, for example, they need not go outside of this environment of their own ERP, say SAP. So they just, the files, etc., gets created. Whatever is the authorization metrics within the company, approval metrics within the company, people just go and approve. And once the final approval is done, the payment goes without having the need to come into the banking system, and then you get the various confirmations and reverse MIS which post directly in your ERP to say that, hey, look, this payment was done successfully, so relax. So this is again is a massive step up, both from a efficiency perspective, from a risk management perspective, and also from a business perspective. I mean, this is, and if you ask me, this is the way forward for banking. There's no doubt about it. And lastly, blockchain. Now, this has been a very loosely spoken word over the last, I would say, 5-7 years, and this is yet to be the mainstream in banking, because it takes a lot of consensus among multiple players to evolve this whole chain. This is definitely a big step up in any kind of risk management, because in a perfect world where everybody is connected to a blockchain, say vendors, dealers, suppliers, everybody else. So anybody who needs to know anything will, the information gets coded in the blockchain, and in a non-refutable manner. Nothing can be fudged. So many of the things which Amit mentioned about on the transaction part or in the business dealing parts, etc., can be completely eliminated. But of course, it takes a long time for any country, economy, or ecosystem to develop the blockchain. But in ICICI Bank, we've already taken some baby steps. We've done over a $2 billion transactions already in the last couple of years. Between buyers and sellers using the blockchain. It's still early days, but I think that's going to be a significant way forward, which connects multiple stakeholders to manage and eliminate risk. So that's our take on how we think as a bank we could partner with you and help you manage your risks. Thank you so much, and over to you. Yeah, so I think I kind of summarized this in the same way. So technology. So if I have to summarize this whole thing, risk mitigation through ecosystem approach, technology-driven approach, and basically partnering with multiple ecosystem player and not just at the corporate. And yes, use of data and APIs to kind of power this whole ecosystem. So that's in a summary how we think we can partner with companies from Germany and definitely help them to manage their risk. We can't solve all problems, but yes, we can be of aid. Thank you.
Thank you so much, Mr. Hariharan. It was a very impressive presentation, as we could see the changing paradigm of banking in today's world. And it was very interesting to note the different presence of ICICI Bank in the financial sector, and how it is helping the companies who are looking at coming to India, or also who are already working in India. These companies supporting through different controls and management ways to help them.
There's some issue on your thing. We are not able to hear you properly as well.
I understand. I would like to hand it over to Mr. Nath for the question answer session now.
Am I audible? Yes. Yeah, so thank you. I think thank you very much, Amit, Harald, and Kashinath for the presentation. I think excellent presentations. We had a very nice address from Natalia also. Thank you, Natalia. I don't know if you're still there with us. You could switch on your camera if you're there. Yes, thank you, Natalia. First of all, let me come, I think, with one important point in your presentation. I just request you to maybe say a few words on that. It was very interesting. You mentioned about the smart zone. So would you like to elaborate that a little bit for the benefit of our viewers, Amit?
Mr. Nath, I heard my name being called out. Can you repeat that question? I lost it a little bit in.
I found this in your presentation, Amit, you had mentioned about the smart zone. I thought it was a very interesting aspect. So I just wanted to request you if you can elaborate a few words on that, because I think that's a very critical part between what is where you are going out of line and where you are within the premises.
It's an emerging market concept, Ms. Nath, which is extremely relevant to India, and it fundamentally addresses the three levels. One is around the black and white aspects. You know, in India, better or for worse, there is always a gray, and what you need to do if you are in the smart zone, you're very clearly beyond the gray or beyond the pale, as they say. And so, you know, any kind of uncertainty around whether a particular kind of quantification of, say, effluent treatment, or in the world, offsets of carbon and so on and so forth, are taken care of, comfortably invest in going a little bit beyond what the stated norm is. That's number one. Second is about kind of the way that you interpret the policy, especially, you know, subjective policies like code of conduct and so on and so forth. You know, when it comes to management of or imposition policies, say a simple concept like workplace violence or harassment or POSH, it's very important where, and this is true of not just German companies, but any company doing business in India, when you are evaluating as an internal committee what the merits of a particular case of, you know, workplace violence are, it's very important to have a line, a compliance line, but go beyond that to what we call the right thing to do, or the right zone, what we refer to as a smart zone, where go beyond what even the stats and facts are telling you, and you're kind of looking at the intentions, you're looking at behavior, and so on and so forth. And that's very important. You know, what is the objective that was there really intended, and if not, you know, what was the case, and indeed, you know, in the case of something that is not construed as malintent, was there really an underlying reason why that particular behavior should not be condoned in any way at all, etc. So that's the kind of looking beyond the evidence, but also, you know, looking at what the intent is. And the third level, and this is kind of very critical, when you define, especially for a manufacturing company, when you define process systems, you have just-in-time technologies that are defining your entire business value chain. You know, and we were speaking about this Indian company that worked very efficiently to just-in-time supply chains, whose entire operation came to a standstill because you know, China shut down first because of the pandemic, and then, you know, Europe did, and then India did, and that was precisely their entire value chain. You know, it started in China, went to Europe, and them. So they effectively, because they were enabled, just not able to kind of keep in pace with their business demands, and so had to shut down much earlier than what even the you know, caused them to. So the point being that, you know, while you live in a world that's global, there are lots of inefficiencies as well as unpredictables, risk factors that you need to manage for, and you're best off if you kind of work in the smart zone. And you need to define that as an organization. You need to define your smart zone. It's very bespoke. It's very individualistic. It depends on what your constitution says. It depends upon what your mission says. It depends upon what your code says to you. That companies need to define that smart zone.
Right. Thank you. Thank you, Amit. I think that was a very good explanation also. Natalie, let me come to you with one question. We saw some positive development on the European-Indian Free Trade Agreement, Natalie. What was there? There was at least an announcement that the discussions would restart. I think, how do you perceive that? I think it's a good step, because almost last 6 to 7 years it was on ice. And going ahead, do you see some movement happening in this direction?
Yes.
Actually, we are not able to hear you. Yes.
We can movement, and as you're
You're not
rightly saying, I think almost 10 years. That might be the internet connection. No?
Yes, now perhaps Natalie, we can, if you can just we missed your response. Unfortunately, it was not audible.
Yeah, Rajesh. Yeah, Rajesh, I'll need to get off at 4:30. So
Sorry, Kashinath, you have to leave
I said,
or?
yeah, I need to get off at 4:30.
Right. Maybe I think we are not able to hear Natalie. So maybe I can put the question to you, Kashinath. Is this one important, what you mentioned also is, especially during the pandemic, there has been a significant increase in cyber crimes and cyber risks that the companies are facing. So when we are talking about online banking, we are talking more digitization. How, from the bank perspective, what would be your guidance to your customers so that the cyber risks can be mitigated to some extent?
Yeah, so you see, the risk in banking, especially in online banking, comes from something what we call as man in the middle, right? So you have the customers on one side, and then you have the the bank on the other side, and there are a lot of pipes connecting them. There are file transfer protocols, there are firewalls, and various kind of connectivity, and everything happens through the internet. So, so there are two things. One is that so long as customers are having a robust risk management practice that they have put in place, as we are recommending. So, first and foremost, our own online banking platforms, they come with the best in class, security, whatever is mandated by the regulator. Plus, obviously, because it's core to what we do, so there's a lot of investment that keeps happening in terms of doing it, and therefore, there are multiple ways to do. Like, OTP is a way to authenticate. And now there are some banks who use kind of some dongle or something like that, which is a real time thing. And so there are multiple ways that the bank is managing the risk. And our advice to customers would be to say that when we are integrating with the customers, we insist on certain security protocols, and many a times customers actually will need to invest or get their manpower aligned, or invest something in building their own security system. Because hey, look, when we are connecting, we say that hey, look, I need to get feed from a secure system so that I don't pass back anything unsecure to you. So sometimes customers are loathsome because it's an infra development at their end. Say, no, this is what I have, you come and integrate. So we have had situations where we then say that hey, look, but we can't shake hands in an unsecure way, because the man in middle can get in and actually can cause harm to you, also to me, because the man in middle can enter anywhere and go any which ways, right? So that's our that's always our advice, that any bank that you deal with, the bank of repute, I'm sure, will insist on security standards to be maintained when you are integrating with the bank. And I think corporates, even though it is expensive, or even though it is appearing not mandatory, they must invest in this infrastructure for sure. And the other thing that I told is about API banking. So API banking, to a large extent, kind of obviates the need for doing many of these things, because the chances of the man in between gets minimized, because the banking is happening right from the in situ environment of the corporate, there in the bank is embedded in the corporate ERP. So the chances of the man in between coming is that much less. The internet handshakes are that much less. And then whatever gets transmitted is highly coded. There are SSL certifications and all that, whatever security protocols are there, they are all followed. They are the standard protocols, and not to say that this also cannot be breached, but then if you look at the banks world over, I don't think a core bank pipe is that easy to break into. I mean, you wouldn't have heard too many instances. It would have happened somewhere at the joint. That's where the man in between comes in with the malware or some such thing. So that would be our advice to customers, that please do follow the bank's protocol, especially on financial transactions.
Right. Thank you, Kash. Amit and Harold, if I may come with the same question to you regarding cybersecurity, because especially now during the pandemic time, many companies have been impacted. So what would be your suggestion here, or what would be your words of guidance here?
Harold?
Maybe if I can jump in. First of all, our experience so far is that up front a sentence, we are always thinking cybersecurity from the actor's point of view. So most important is to understand who is attacking a company. So it's a criminal, it's a national state, or it's activist or whatsoever. In many cases we have, let's say, low-level attacks that have to be fought back on the base of firewalls, expand that, and of course training for phishing and all the other things. But most important is to understand if a company, particularly a technology companies, on the plate of those guys who go after IP or go after cash, and we have some particularly medium-sized companies which are fairly cash rich and equity is strong, then they look for the weakest point in the chain. It's usually not headquarters. It's usually outside a small operation or something which is grown quickly, and then of course it's not really stable and set in its own process. So if I would be an attacker and I would go after a German company, then I might look at India, particularly non-foreign business companies. And of course, all those people who are active in India have to understand there are already protocols in place for headquarters, because there's what protect all of everything. And there are protocols in place how to run certain operations, processes, and I talk particularly how to act. One side of the story is about prevention and being aware. The other side is about acting fast. It's most important recovery or upward business continuity. I mean, relying on headquarters on those things, when you have the question, we might be a perfect target for an attacker. Most important. So from the inside, I would say, please ask for and please understand what and then we always recommend training. Awareness building and training is most important, and make sure that you have everything in place to ensure what I've talked about up front, business continuity, and that you are in control, so to say. But I guess Amit can add some aspects as well.
Amit, you want to add something?
Only very briefly. I'm conscious of time, and maybe get in some more questions in. Since I'm storyteller today, one of the things that we have seen too many happen too many times is something that we call business email compromise, Mr. Nath, where the man in the middle that Kashinath spoke about, and the insider threat that Harold spoke about, where the malfactor comes in and inserts themselves between a subsidiary company and a supplier in Germany or Denmark or what have you, and obviates either the invoicing process or the authentication process in some way, shape, or form. And that's happening because of many things. People's networks have gotten very stretched now. We are all working not from our desks, but from our bedrooms. We are working in a very anxious environment. And so when we get an email that says, here is the next great cure for COVID-19, we want to click on that and, we want to see what's happening. And that takes us into, so it's playing on people's human emotions. And it's very important, as Harald said, to train people to revise your information security protocols, to understand that, your business email is going to be the best way for the man in the middle to kind of get in into the system. Another example that came to mind when Kashinath was speaking about the man in the middle as well. CNF agents, large pharma company that is providing a lot of very valuable support to India and internationally COVID support, had their CNF agent not invest in the right IDS platform, intrusion detection system platform, and led to a backdoor or a trapdoor being opened into their system and compromise their entire kind of network. So again, the man in the middle, in some senses, could be your own CNF agent who may not have invested in everything because he or she was not able to. Multiple stories, but yeah, fundamentally, cyber is probably one of our biggest business threats going forward.
Right. Thank you. I think we would have loved to continue the discussion, but we have now run short of time. So at this juncture, I would just like to conclude it and thank Amit, Harald. Both, I think, was a very interesting, very relevant presentation, and especially I liked very much the spotlight examples you gave. I think many perhaps could relate to the difficulties they had. I find Natalie has joined us, so thank you, Natalie, also for your address, and also Kashinath, I would like to thank you for your presentation, and also thanks to all our viewers. In fact, we had almost around 175 people joining, so it's a good, especially in these times, to have so many people. It really speaks volumes and of the reputation of our partners like Control Risk and ICICI Bank, and also the German Embassy. So thank you very much to all the viewers for joining us for this interaction today. Friends, I think our country, we are struggling to come out of this second wave, and no doubt economy has been impacted. In fact, many lives have been lost. So also I would like to, in fact, our prayers to all the friends and families of all who have fallen in this COVID battle. It has been a difficult time for everyone, for the companies, as well as for the economy. And we can perhaps take guidance from this phrase by the famous Henry Ford. He said, when everything seems to be going against you, remember that the airplane takes off against the wind, not with it. So friends, I would say stay safe, stay well, everyone. Wishing everyone a nice, relaxed and safe weekend. And thank you for joining us for this interaction. And thank you, Control Risk and ICICI Bank, for partnering with us. Stay well, Natalie. Thank you, Ajmal. Goodbye. Everyone, take care. Goodbye. Thank you.
Goodbye.
Goodbye.